Hey, my name is Tucker Kroos. Welcome back to my channel. In today's video, finally getting to you with that updated UEC video. Of course, the ticker, UEC, with a share price of $3.55 at the moment, with a market cap of $1.3 billion, an updated price per pound of $4.90 now that we factor in all the acquisitions over the past year or so, as well as trading on the New York Stock Exchange. Obviously, no dividend. As you know, all of this data throughout this video is going to be as of December 5th, 2022. So I'll only be covering the deposits with the PEAs completed because they have like dozens of deposits, since yeah, that's needed to build a DCF and actually spit out a fair value, though PEAs are largely inaccurate when compared to a PFS or a DFS, plus any study more than a year or two old will have wildly higher costs today. And so, yeah, obviously not going to be super accurate either way, but at least it is something. Alright, let's get into their chart. Alright, so their 1 year chart, we can see for the past couple months here, back to about May, they've kind of been trading in this range here. We can see up and down. And nothing really crazy seems to be happening with the RSI at the exact moment. Doesn't really seem like we have too much, like, any kind of crazy divergence or anything like that. Nor does it seem that there's anything crazy really happening with the moving averages here. Although we are kind of stuck under the 50-day moving average right now. So it's kind of tough to see where this is going to go. Are we going to get a little bit of a bounce here back to the top of the range? Or are we going to break through this range? Again, I think kind of depends what the general market does. And here's just an all chart. Again, nothing really special. Same idea as every other uranium all or 10-year chart. Though, something I will note is it looks like we almost kind of have a cup and handle here. Though I'm not sure if this high got high enough to really count as a cup and handle. Though, you know, maybe someone knows TA a little better than me. Or a lot better than me. However, much better. Alright, now on to the all chart here. Again, looks similar to every single other uranium chart you see, right? It's, you know, big ups, you know, 2007, 2011, dead, and then around 2020 started to jump back up. It looks like we potentially have some sort of cup and handle here, though I'm not sure if this high, because it's quite a bit lower than this high, makes it count as a proper cup and handle. Not to mention this is kind of a messy upswing compared to this. Alright, now let's quickly move through a couple slides from their presentation. So, $570 million in accretive acquisitions of Rosatome's Uranium 1, America's UEX, and Rio Tinto's Rough Riders. This has just all been stuff since I last went over them, I believe. And 198.4 million pounds of measured and indicated, 67.7 million pounds inferred. And so that's an increase of over 3x of total resources, 2x increase of supposed production capacity, which we'll get to in a little bit, and 6.5 million production profile per year, supposedly. The largest resource base of fully permanent low-cost ISR projects of any US-based producer, 93 million cash and liquid access, strong balance sheet, no debt, obviously that's good, 5 million pounds of contract physical uranium purchases, at an average cost in their warehouses of 37 pounds. Alright, so UEC North American Project Pipeline. So they kind of have a lot of their resources listed out here. Then Paraguay and the Athabasca Basin. Then they actually have some of theirs. And then they actually have some of their projects that are in a development phase here. Again, about 100 million pounds total. And then another 100 million pounds that they consider production ready. Alright, so now onto their share structure here. It's actually not absolutely horrendous. And that gives us 345 million shares outstanding, which compared to their market cap isn't actually bad at all, with not a ton of options and warrants out at least this exact second. And then top shareholders here, a whole lot of big funds, largely because of the fact that they're in the Russell 2000, if I were to take a guess, as well as UEC. They list UEC's team first, but that's actually false. A lot of these guys hold significantly more than the UEC team, which we'll get to in just a second. But first, strengthen positioning and liquidity among peer group. And so this is just their 1 year average daily traded value and on the US listings. And so this is kind of telling us the average volume for a couple different companies. Again, UEC. That's, again, always been one of the biggest things with UEC. Their marketing's been really good. Their volume's quite high. Being on the New York Stock Exchange gives them a lot of that high volume, great tradability, and, you know, great, you know, story because they've got so many pounds on the ground. But are they actually going to produce? I think no. And into the ownership breakdown, 50% And into ownership breakdown, just to go over from before, 56% general public, 42.3% institutions, 1.7% individual insiders. And so this is just the top 8 shareholders. Top 8, you're wondering, it's so that we could fit in the CEO here. He owns just under 1%. And again, yeah, from before, they're kind of lying to where they show UEC team first, making you think they're the largest shareholder. But a lot of these other funds hold a lot more, which again means that that's kind of the con also to UEC's very high volume and great tradability, is that they're also hit with the general market more so than, like an ASX uranium stock, where it's kind of doing its own thing for the most part. Alright, now into the first project here. This is an Arizona, USA development conventional mine. And so it has 29 million pounds in the ground. The royalty, it doesn't seem there was one. Then parts per 100 grade, 0.03825%, so pretty low, of course. And then a initial capex of 51.9 million with 139.2 million in total capex. OPEX per pound, 33.65 or $33.65, with fairly short construction of 3 years and a decent length of production of 14 years. And now their other main project has 11.6 million pounds in the ground, a 1% royalty with URC, who UEC owns part of. UEC is kind of a circle because URC is mostly UEC royalties, and so it's again kind of just like a little fake shell company type thing for UEC, it seems, for the most part, but that's not important. And then grade, also fairly low, 0.228% parts per 100, 21.243 million in initial capex and 29.99 million in total capex and 43.50 in OPEX per pound. Again, fairly short construction of 3 years and actually a fairly lengthy production profile of 21 years. And again, this is also a conventional mine, though all in Colorado. There's also a significant amount of vanadium here, which I don't really know a lot about, but I include that in the DCF. And this is something they got from acquiring UEX, so 35 million pounds in the ground, pretty high royalty of 10%, 0.154% parts per 100 grade, 115.7 million in capex, 144.5 million in total capex, and then a OPEX per pound of 31.86. A little bit of a lengthier production of 5 years with a fairly short production length of 8 years. And according to their MPV, they only plan to produce 15.86 million pounds of that, and that's the case with every uranium deposit, to be fair. I just didn't have that marked on the other two. So 266 million pounds total on the ground with an average price per 100 grade of 0.43358%. So again, fairly low, though quite a few pounds. And their products are all over the Americas, north and south. And they have an 18% in URC, though again, most royalties are UEC projects, as we kind of went over a little bit earlier. And alongside additional non-uranium resources. And so again, there's a whole bunch more than kind of what we just went over. That's the biggest thing with UEC, though this is more so my opinion. But vast majority of these pounds are in projects that will never be developed. Because yeah, they have permits, but they have like no studies done on a lot of these mines. Not to mention just management and like their CEO specifically and stuff like that just aren't that amazing. They pay themselves a ton of money and like they're throwing around UEC's money and other stuff. Like Amir likes, their CEO likes to do a lot of stuff like shoveling UEC money into some other gold companies he owns and stuff like that. It's just not good all around. And also obviously note that I use both a 50% capex and OPEX inflation. I just don't have OPEX written here, as well as a 10% discount rate. So these fair values are admittedly quite conservative. So again, they are extremely unprofitable at current uranium spot price, but that's for most uranium companies. Then they're severely overvalued at $60 or $80 uranium, and to be fair valued, uranium would need to be over $100 or over double where it is now. So, not the best look, fair value-wise. Though, what I will go over the pros of UEC are absolutely they have amazing marketing. Being on the New York Stock Exchange gives them a lot of liquidity, tradability, and means that they'll probably honestly outperform a lot of companies that are, fundamentally significantly better than they are. And a lot of those kind of things, right? Like, being able to market, we have all these pounds in the ground. They just won't necessarily get into the fact of, hey, how many of these are actually ever going to mine? This is not financial advice. Do your own research. Thanks for watching, and I will see you next time.